if we just followed what happened in 2017, the last time Trump got in, government came in, is we had this correction driven by liquidity. It would take us back down to, let's say, the gap on the chart, something like 80,000. I'm not sure that we get that because of beginning of the year flows from institutions and other players, but a correction is the most likely outcome. It's very unlikely for it to go in a straight line. And you're all going to go, what should I do? This looks terrifying. Oh my God. Again, please, it's fucking noise. Don't fuck this up. It says expect 30% pullbacks. So please do not start thinking, how do I hedge this? Do I top out? Do I sell mine up and buy them lower? What you'll do is you will lose out and you will miss the rally because you've overcomplicated a simple trade. The simple trade is do nothing. So please think about doing nothing. We also don't know if Bitcoin falls, whether alts take that pause and everybody focuses on altcoins and alts rip higher. So we don't know the structure of this. So again, don't do anything unless it... This is why we don't use leverage, right? Here is the comparison when you put them all together, the last two halvings and where we are now. So where we are now is very similar to the white one. And the white one is the halving from the 2016-17 cycle. Now look at both of those charts. At exactly like whatever it is, 170 days after the halving, they both have this correction, the liquidity correction. It's all the same thing. This is the everything code. It's all driven by liquidity and the Bitcoin halvings and the patterns that emerge. So that correction, however long that takes, call it a month, 3 weeks, that correction ushers in phase 2 of the banana zone, which tends to be the violent propulsion of alts, the banana zone signature pattern. So are we overbought yet? Should we be worried? Should we be thinking, my God, what happens if it's over 100,000 and it tops here? Well, our core risk indicator is nowhere near overbought. We're still barely mid. So it's suggesting we've got a lot further to go. When we look at the log regression channel, this is my kind of chart of truth. The thing that I find is immensely helpful. Well, we're not even at the mean of the trend. So we're still below mean. Now, we're going to go to 1 or 2 standard deviations. In fact, it's never not gone to 2 standard deviations. 2 standard deviations, you're talking $500,000 plus Bitcoin. Now, maybe it doesn't. Maybe the law of diminishing returns kicks in and gets to 1 standard deviation. Well, that gets you to 250,000 or so. I'm not giving you projections. I'm giving you contextualization of what an exponential trend looks like. All to play for, so there's nothing to worry about. Cycle top finder. This has been a really good way of finding the cycle top. We are nowhere there. Absolutely nowhere near. So again, chances are we'll have a little pullback in January. First we'll hit year end, a little pullback in January, and we'll just keep ripping higher until we eventually hit the cycle top. But that's a long way from now and much later towards the very end of 2025 or even into 2026. We can't tell yet. We see how liquidity plays out, but that's where we are, the banana zone.
Tether has made a significant move in the cryptocurrency space, boosting its Bitcoin holdings with a $780 million purchase. This transaction, the largest addition to Tether's Bitcoin reserves since March, aligns with the company's 2023 commitment to allocate up to 15% of its net realized operating profits toward acquiring Bitcoin. With this latest purchase, Tether's Bitcoin holdings now total 90,083 BTC, valued at approximately $8.3 billion, solidifying its position as the second largest private Bitcoin holder after Block 1. The purchase was facilitated through 2 substantial transfers recorded by Arkham Intelligence on December 30th. Bitcoin's trading price of $92,500 at the time valued these additions at nearly $777.4 million. This strategic move reflects the increasing trend of corporations adding Bitcoin to their treasuries as its value rises, evidenced by Bitcoin's doubling in price in 2024 and an impressive 108% year-to-date growth despite recent market dips. MicroStrategy also expanded its Bitcoin portfolio with a $209 million purchase, continuing its aggressive acquisition strategy that has made it a leading corporate Bitcoin holder. Meanwhile, in Hong Kong, lawmakers are exploring integrating Bitcoin into the region's reserves, citing its potential to boost financial stability and attract global investment. As 2024 ends, Bitcoin's ability to sustain its peak remains a key focus, with analysts debating its trajectory into 2025 amidst market volatility.
In the end, this is the game. The game is the banana zone. Look where we are. We've just started the banana zone. We've had the boring zone. We all suffered that. We had a big boring zone this year, much like the 2012 boring zone. We've just started. Now look at the beginning of each one of these. There's this little wiggle, which is the correction that happens in January. Great. It means nothing on the chart. So the banana zone lies ahead. I've given you the playbook. You can, if you play it right, unfuck your future with a banana. Ride the banana zone with me. Follow the don't fuck this up rules. It's all to play for. So anyway, hopefully this is useful to you. I keep trying to simplify. I see the same questions come up and up and up and up and up again. Is the market going to top here? What do I do? Oh my God, when do I take lifestyle chips? How much Sui's do I have? How much Solana? I can't help you with all of these things. I can just give you a general contextualization, and I hope I've done it here. The thing is, breathe a little bit. Go and touch some grass. Stop hyper-focusing on the 5-minute charts. Stop all the noise on Twitter. Just relax. Ride the banana, and you'll unfuck your future.
Bitcoin's price appears poised for a monumental rally as on-chain data highlights a dramatic decline in reserves on centralized exchanges. This year has seen reserves plummet from 3 million BTC in January to just 2.4 million, signaling a pivotal shift in market dynamics. The approval of the spot Bitcoin ETF in January marked a turning point, driving significant outflows from exchanges and pushing prices to unprecedented highs. As large-scale investors moved assets off exchanges, Bitcoin surged past $100,000, reaching a peak of $104,000 by November. Institutional investors in Wales have adopted a long-term holding strategy, withdrawing Bitcoin from exchanges and reducing sell pressure. This behavior contrasts with retail investors, who often transfer tokens back to exchanges during minor price fluctuations, creating redistribution cycles. Analysts have attributed this shift to institutional confidence in Bitcoin's future, with the HODL mentality becoming more prevalent. Meanwhile, Bitcoin miners have also increased their reserves, taking advantage of high prices to bolster their holdings rather than selling during downturns. Analysts predict these bullish trends, coupled with institutional activity, could propel Bitcoin's price to $200,000 in 2025, supported by favorable market conditions and regulatory developments. Don't forget to like and subscribe, and let's keep this bull run going.